Very good afternoon. Let's take a look at the markets. Asian markets were mixed at the close. This as invested on the first batch of tech earnings set to come out later today, while anxiety continued at talk of the possibility of the US Fed chair being removed from his seat before time, with uncertainty around how the tariff story might play out come the 1st of August. The Nikkei share average advanced by 0.6%. The Hang Seng Index ended the session flattish, down 0.08%, while the Shanghai Composite Index closed up 0.4%. US stocks ended yesterday's session in the black, but market sentiment is said to be ropey as investors observe a number of moving parts. The big banks released their results. The Bank of America's stock fell by 1.5% on a lower revenue report, while Morgan Stanley reported robust profit levels, but this was not positively reflected in share prices. Some concerns around talk of President Trump firing US Fed Chair Jerome Powell also caused jitters, although Trump indicated that was unlikely. The Dow by 0.53%, the S&P 500 gained 0.32%, while the Nasdaq Composite Index rose by 0.25%. Looking at local indicators, we see that the all-share index is currently up at 97,184 index points. The rand is trading at 17.89 against the US dollar, 20.73 vis-a-vis the euro, and 23.97 against the British pound. On the commodities front, we see that gold is trading at $3,328 an ounce, platinum at $1,416 an ounce, while Brent crude oil is trading at $68.58 a barrel. And so we get into conversation now with Simpiwe Lejane. He's an investment strategist at ABSA Investments. Thank you very much for joining us, Simpiwe. So markets appear to be on the up, but it's not as if the same can be said for sentiment. How are you reading all the various moving parts currently?
Yeah, it's really quite a mixed bag in terms of the different drive. We are, of course, in earnings season for the second quarter, and we've seen quite a lot of resilience from an earnings perspective if you're looking at the first quarter earnings results and what we're also starting to see with this most recent earnings season. Of course, from a tariff front, the 90-day pause period has expired, and as such, we've seen the letters from the US president to the various nations, so taking tariffs back to fairly aggressive levels across most of the countries and reverting them back to April levels. But what is key in terms of what has happened during the 90-day period is that at the very least between the largest consumer and producer, which is China and the US, we've seen a significant de-escalation in trade tariffs where now they are sitting at a bit more moderate levels compared to what was initially being proposed. And of course, markets will continue to monitor what's going to happen between now and the implementation date because, of course, the US taken a stance that they are willing to negotiate with most countries on these tariffs.
Yeah, speaking about negotiation, we're hearing from the presidency that talks have now begun around the 30% US tariff import levy on South African goods, and South African and US officials have now started talking about this. We're just 2 weeks away to the 1st of August. Do you hold much hope out in terms of what leverage do you think South Africa can bring to bear on the negotiations?
Yeah, I think there is quite a few key aspects that, give us a bit of leverage in those discussions. I think the main issue is really just the timelines being fairly limiting. So from a 2-week perspective, it does make it a bit difficult, to be able to close deals in such a short space of time. But also what it may just be a likelihood of some of those timelines potentially being pushed out. But a lot of this is still yet to be seen. But from a leverage point of view, of course, very importantly, we export, the US imports quite a lot of precious metals, so the likes of platinum, as well as some industrial metals, so chromium, manganese. A lot of those imports, they depend quite heavily on South Africa. And in fact, when we're looking at tariffs, those metals are actually exempt from tariffs as it currently stands. So quite a large chunk of what we export to the US is actually exempt. Of course, course, other areas is, steel as well as automotive. So they do get quite a few of their automotives from our industry. But what I also think is quite important in terms of leverage is, of course, just our geographic positioning, especially given, different trade choke points and how movements of goods move across the globe. A lot of the geopolitical tensions that are heightening in the likes of this canal does mean that, of course, the Cape of Good Hope here in the Western Cape becomes a key, entry point for the U.S. to move from the west through to the east, and the movement of goods between the two. So those things really do make us, stand quite favorably from a U.S.
Yes, Simpiwe, I hope we haven't lost you, because it looks as though we have, but I'll ask the question nonetheless. How are you seeing our local indicators, the bond market, the local currency? Of course, there are lots of exogenous factors that are taking place, but we have the issue of the GNU, which looks like it's still faltering.
Yeah, look, I think that is the nature of coalitions. So coalitions in general do tend to be a bit volatile, because you have different parties that generally have opposing views, needing to come to the party and come to the country. But I think really it hasn't necessarily been all that negative in terms of especially some of the key aspects. So when it comes to international relations, we did see a collaborative front in terms of some of the talks that took place with the U.S. president, where you had representation from different parties of the GNU being there, and putting the interest of the country first. Of course, there will still be politicking that will naturally happen, and some political noise that will come with that. But I think quite a lot of the key issues from a socio-economic and from a international relations perspective have definitely been positive. Of course, in terms of the budget, that has meant that we have seen a budget being only approved quite later in the year. But there's two sides to that. To say, on the other side of it, of course, there were delays, but on the one side is that there is quite a lot of accountability now from a national treasury perspective, and quite a lot of oversight, which does speak to a fairly healthy democracy. So really, even though the GNU is looking, there's a lot of noise around it, but I think there's a lot of positivity as well in terms of how it has been operating thus far. And then when we're looking at markets, we're seeing quite a lot of stability in bonds. You're seeing, SA bond yields having compressed to below 10% currently, and all the volatility that we had seen earlier in the year was really largely due to exogenous factors.
All right, Simpiwe, thank you so much for your time and insights. As always, Simpiwe Letlojane, he's an investment strategist at ABSA Investments.